Very good morning. My name is Malcolm Graham Wood. I'm delighted to be back on Core Finance for my CEO interview with a twist today, because I'm delighted to be able to welcome Julian Maurice-Williams, CFO, and Duncan Wallace, Technical Director of Chariot Oil Gas. So good morning, chaps.
Morning, Malcolm.
Morning.
Excellent. I'm going to assume that for my first question, which would normally just be a sort of helicopter view of the company, that most people know that by now. There's been so much going on in one or two specific areas. I'd love for you to just maybe, Julian, give me an introduction into sort of new Chariot, the board, and I know you've had some sort of new values instilled and so on. So perhaps you could give me a rundown of how it's looking right now.
Absolutely, Malky. So there have been big changes, both in the board with the promotion of Duncan and myself, but also in the ethos and the values of the company. As part of that, we have needed to take a hard look at what the business has been over the last few years. We have drilled 4 deep water wells, but they have all failed. And the share price over the last few years has been frankly atrocious. Although it has risen a bit recently, it is still nowhere near where it should be. Also, the world has changed with ESG. No one wants to do high-risk oil exploration anymore. And therefore, we need to change and we need to adapt, and we need to do that now. So what are we doing about it? Well, firstly, we have a new, young management team who has energy, drive, and vision. Secondly, we have an exciting gas project, the Anchois gas development in the Lixus licensed offshore Morocco. Now, Duncan, who identified and championed this project, when this development gets onto production, it should be chucking out material amounts of cash. We are going to drive this project forward at a greater speed. Thirdly, we are going to be bringing in new ventures that play to our strengths, new ventures which are scalable, because that's what we think our shareholders want. New ventures that realise that the world has changed, and so it's unlikely that we will bring new ventures which will be frontier oil exploration. Finally, we are going to be banging the drum, and we'll be banging it loudly, and we will be getting a message out there, and we'll hopefully be putting some sizzle back into our share price. Now, obviously, I've spoken to you previously, but it'd be good for Duncan to introduce himself as well.
Fine, Duncan, why don't you introduce yourself, tell us about yourself, and then start with the next question, which is going to be, tell us all about Lixus and Anchois and how important it is.
Sure, thank you very much. Yeah, I'm a petroleum geologist by background. I've got 20 years of experience now in the sector. I joined Chariot in 2013 as exploration manager, and have overseen our operations, our partnering efforts since that point. And prior to Chariot, I was with Perenco for about 12 years. And as you probably know, Perenco have been very, very successful in monetizing unloved assets. And one of the things that they always did was to develop and create value from undeveloped discoveries. So I was able to leverage that experience that I got with Perenco to identify and mature the Anchois project. So I'm very excited to sort of join the board. Now, Lixus is a core part of our asset, and look forward to growing the company through Lixus and the Anchois development, but also through some other ventures that we have in the pipeline.
Excellent. Now, let's dig deep, shall we, into Anchois in particular. Yeah, we know it's a good gas discovery, and with good quality. We know it's got decent quantity there. So talk us through that, and then I know that there's some exciting news on. You've got pre-feed underway. I'd like to hear about that. And then, of course, the resource update, which you announced the other day, which was a cracking increase in resources. And then maybe towards the end, you or Julian could talk about the Moroccan gas market, how you're going to fund it, and how you're going to partner it, if that's okay. If you start, Duncan, that'd be great.
Yeah, I will do. I'll start with the resource update that we recently announced. The great thing for us with Lixus and that project that we acquired about 18 months ago was that it came with a legacy 3D seismic database that covered almost the whole of the license area. There were 4 previous wells that have been drilled, including the Anchois discovery well, which found around 50 meters of net pay across 2 very high quality reservoir sands. The gas was very, very good quality, predominantly methane with no CO2 or H2S. So that is very, very favorable for a low risk development project. So what we've done over the last year or so is that we reprocessed all of the seismic data using the latest technology, freestack depth migration. We completed that earlier this year. We then updated our evaluation of the resources, the contingent or discovered resources associated to Anchois, but then also some prospective or undrilled resources within the Anchois field, those sands which are either deeper than the proven gas sands or in adjacent fault blocks. After completing our evaluation, we then requested Netherland and Sewell and Associates to produce an independent review of those resources. And that's where the upgrade has been seen. So our 2C or best estimate discovered resources have gone up 20% from 307 to 361 BCF. But beyond that, these low risk undrilled gas sands that have very, very similar seismic attributes to proven gas at the Anchois A and B sands, those together bring the total best estimate resources associated to Anchois to over 1 TCF. So that's a huge upgrade in resources. And that's important to provide a very large resource base for future production growth, but it also changes the value proposition of the appraisal well, which is the next likely investment we would make on the license. So that appraisal well would not only unlock a material development of 300 BCF, but it would also allow us to test those additional resources by either deepening or doing a sidetrack from the appraisal wellbore that would demonstrate up to a TCF of potential for very low incremental cost over and above that appraisal activity.
Excellent. And you're underway with the pre-feed development at the moment, is that right?
That's right. We've commissioned a pre-feed study with Exodus, who are a very large, well-known engineering consultancy. And the work so far has defined a basic development of around 70 million cubic feet a day. That would be for around a 10-year production plateau. And the great thing, as I mentioned earlier, because of the excellent reservoirs and the high quality gas, is that development, which is a subsea to shore development, uses conventional proven technology. So there is nothing unusual or bespoke that's required for this development. And the early results from their work are showing a 30% reduction in capex compared to a comparable development plan that was scoped out last year at the feasibility stage. So encouraging on both the subsurface and also on the engineering and cost side for a development project.
Excellent. The sort of next bit is the three-parter that I mentioned before. I mean, first, maybe Jules would like to have a crack. Is the Moroccan gas market still as exciting as I've always believed it to be? How do you intend to fund it? And we've talked about partnering a lot. Any further thoughts on that?
Yeah, absolutely, Marky. So let's talk about the gas market and the commercialisation in Morocco. So, as you previously stated, the gas market in Morocco, it's a high gas price. It's a growing energy market. The actual location of the license, which is just off the Atlantic coast of Morocco and just south of Spain, means that we have the ability to both access the Moroccan market, but also the European market as well. I suppose the question is, with gas, unlike oil, gas is more difficult to transport, and therefore it helps significantly if we have that large and growing market. What have we been doing so far? Well, we've been having discussions with as many parties as possible. And this is the state electricity company, obviously, but also other private electrical generation groups, industrial users, and some of the largest Spanish gas players. If we now move on to the second part of your question, which is really around funding, and there are two strands to the funding: partnering for the appraisal well and debt for the development. Partnering, we are pleased at how this is going. We have new parties going through the data room now, and we believe the recent resource upgrade that Duncan mentioned, it will further encourage other groups to come into that data room. There's been a certain amount of frustration that the farm-out has not yet been announced, and this is for two reasons. First, the COVID situation has slowed everything down. But also, and more fundamentally, we are not going to take a deal which does not protect the value for our shareholders. If that farm-out process, that announcement, that farm-out will take a bit longer. It will take a bit longer. Now, the second strand of the funding piece is debt funding for the development. As I previously stated, this is a very, very debt fundable project. And there are two reasons for this. The first reason is the project is very economic. The second reason is it ticks all the ESG boxes. Now this project has already been reviewed by the major RBL providers, the multilateral lending agencies, sovereign wealth funds. Moroccan banks, Nordic bond providers and other debt providers, and they all love this project. And we'll be able to announce something material on this shortly.
Good, that sounds really good, and it's pleasing to see that Elixir is coming on with, I think, the market understand about COVID, but it still seems to be moving on nicely. Julian, you have this morning announced your interim results, and it wouldn't be a bad idea if you could perhaps talk us through them while we've got you.
Absolutely, Malky. So there are two bits that I would like to focus on within those interim financial statements. I hope shows the new team will be bold in progressing the business. So first is cash management. In the first half of the year, we carried out a large restructuring of the business. And this was really about right-sizing the business, but also about the change in direction of the business away from deep water oil exploration. And this means at the half year, we have $5.8 million in cash. We have no debt and no remaining license work commitment. And our annual cash overhead is now around $2.5 million, which is half of what it was previously. And we will continue to manage the company's finances in a prudent manner. We then come on to the second sort of issue to focus on with the interim is the impairment of assets relating to oil exploration. Now, Malky, this is a big number. So it's $67 million and relates to historic costs spent in Namibia and Brazil and some leftover well inventory. Now, I want to be clear, these are non-cash impairments which have no effect on the actual functioning of the business. It is simply an accounting entry. I want to ensure that there's no confusion on this point in the market. The message that we do want to send to the market is that this is a new management team that will be ruthless in changing the direction of the business and focusing on getting value for our shareholders.
Excellent. Right, I'm going to move away now. And first of all, I'd like to ask you to tell us the other licenses you've got, particularly in Namibia and Brazil, where you stand with regard to the rest of the portfolio.
Sure. Yeah, I mean, clearly Morocco and Lixus are front and centre for us at the moment. And we have no material investments planned or actually commitments remaining in either Namibia or in Brazil. But there are some important updates and considerations in those licenses. And in particular, that really is around third-party drilling activity that's expected in both regions. In Namibia, as you will remember, we drilled our well on Prospect S in October 2018. We did drill that well, safely and efficiently, but unfortunately was unsuccessful from a commercial standpoint. But we've been doing all of our post-well evaluation since that point, and we've got an updated prospectivity description on that license. It's a very large license area of 16,000 square kilometres and still with some very interesting residual exploration potential. So for the first time since prior to that well, we've reopened a data room in Namibia, looking for potential project partners. Because Namibia continues to be a country that is attracting the global exploration industry. And with at least 2 wells planned in the next 12 months and potentially a couple more in the next 24 months, a lot of companies are interested in taking a look at Namibia and the potential. So we do have an active data room process and have companies coming through there. Similarly, in Brazil, that's an area where we have no outstanding commitments. We've acquired our 3D seismic. And we have an interesting prospect inventory compiled there with one lead prospect that targets over 900 million barrels of aggregate resource potential. Now in Brazil, we see that there'll be third-party drilling activity from Petrobras. They've announced a well to be drilled in the basin late this year or early next year. So assuming that happens according to the schedule, there will be some read-throughs on the value for our exploration portfolio from the results from that well. Our blocks are situated up dip and on trend from majors who are playing in the deep water in that basin. So I think it's a time for third-party activity to raise the profile and potential value of those portfolios. And we look forward to hopefully bringing on a partner in those areas in due course.
Excellent. Just want to take you back, Julian, to something you mentioned earlier on in our chat. So you said that you might have 1 or 2 other ventures on the go, or in the way that Chariot is changing a bit. Is there anything you can tell us about those new ventures or what you're planning? You said that they're exciting and sort of changing the way that Chariot is going to a certain extent.
Yeah, absolutely, Mike. I need to be a little bit careful with what I say here. And our key focus, as we've already said, remains on monetizing that Lixus license. But the company is also exploring other opportunities, but only if they are value accretive for our shareholders. And the opportunities that we're looking at must play to Chariot's strengths, for instance, our experience and contacts within Africa. And also take into account what we think our shareholders want, which is scalable projects, so that we can hopefully get some sizzle back into our share price. And finally, it must take into account the environment and market that we're in. And therefore, as I said earlier, it's unlikely that we'll be taking on any more frontier oil exploration projects.
That's good. You mentioned share price earlier, and you just said you're going to put some sizzle back into it now. You've done very well so far in this interview, but what makes you think that people should get excited about being Chariot shareholders, maybe if they haven't been before, or they have been before and they're not at the moment?
Yeah, absolutely, Marky. So first of all, we have a new, young, entrepreneurial management team who has energy, drive and vision. Secondly, we have the exciting gas project in Morocco, and when this gets onto production, it will be chucking out material amounts of cash. And thirdly, as we've already said, we're going to bring in some new ventures. The new management is to get the story out there and to get the value of Anchois properly recognised in the share price.
Excellent, thank you for that. Before I ask you to wrap up, I would get hung, drawn and quartered if I didn't ask you, as both members of the board, but probably you, Julian, what's the you've got an interim CEO at the moment. What sort of progress have you made in appointing a new CEO?
I think what I can say about that Malky, is Adonis Perelis is obviously our acting CEO, took over back in July. Now, for those who don't know, Adonis is a founder of Chariot. So he's been involved with Chariot right from the IPO and before that. Adonis is a serial entrepreneur, and he's been involved in operations in 17 African countries and taken many projects like Lixus all the way from early stage right through to production. And many of those projects are significantly larger than Lixus. He is still Chariot's largest shareholder, and therefore he is fully aligned with all the other shareholders, and therefore it's brilliant to have him at this moment as acting CEO.
Thank you for that, and we'll wait to hear what happens. We're running out of time. It's been fantastic to catch up with you guys, telling us what's going on. Would you be able to handle, Julian, the final question of all, which is always, putting all that together? Where would you see Chariot in the next 12 to 18 months, please?
So I think we've got a really exciting time ahead of us with lots of triggers. On Lixus, it will be things such as further resource upgrades across the Lixus license as our technical work that Duncan is doing continues. We'll have announcements on gas commercialisation, on partnering announcements, which should then lead to an appraisal well, development debt funding announcements, and obviously results of the pre-FEED project that Duncan spoke about, which will then lead to the FEED project and FID, pushing towards development in those material cash flows. We hope to also have announcement on new ventures which play to our strengths as scalable and take account of the current environment. And we feel that we are a new and different Chariot who will not be shy of telling our exciting story to the market.
Excellent. Well, thank you very much indeed, both of you. Today I have been joined by two new directors of Chariot Oil Gas, Julian Maurice-Williams, who's the CFO, and Duncan Wallace, who's the technical director. Thank you both very much for joining me. My name is Malcolm Graham Wood. I've been doing my CEO interview for Core Finance, and I look forward to seeing you again soon. Bye now.